Hello traders, welcome back to the channel. This is Vishal and today I'll be sharing an important special educational video with all of you about what is trend following trading strategy. Now this video is for market participants who have been in the market probably for some time now and they want to enhance their knowledge, they want to increase their knowledge. And this video is even for a market participant who is very new to the market and he wants to upgrade his knowledge, wants to learn something new. All right. So first of all, you can see that I have made a mind map in front of you and there are around 8 to 9 points. I'll take each and every point and I'll try to explain it in my own words. Okay. So the first particular point over here is, what is a trend? Trend kya hota hai? Trend is nothing but a series of price going in a particular direction. Say for example, if a stock is at 100, from 100 it goes to 110, from 110 it goes to 125, 130, 135, 150, 160. So you can see a stock from 100 rupees, the stock has traveled to 160 rupees. What is this? It is an uptrend. Series of price going in a particular direction consistently. So this is an uptrend. Similarly, if the same stock is going from 100 to possibly 90 to 80, 70, 60, and obviously in between there will be some sort of pullbacks happening. All right. So this overall direction of the trend, if it is down, so then the trend is on the downside. So basically trend is nothing but a series of price going in a particular direction for a prolonged period of time. Now trend can be in many different time frames. You will find an uptrend or a downtrend in long term, like for few years. You will also find medium term trends from few weeks to maybe couple of months or maybe 3-4 months. And you will also find short term trends. Short term trends probably for a few days to maybe couple of weeks to maybe 2-3 weeks, which is for swing trading. Okay. So trend can be found on any different time frame of charts, and it depends what type of trader you are and what type of trend you want to capture to profit from. Second point is, how is a trend built? I guess it's very simple to understand. Say for example, if there is a stock called ABC. Now there is some inbuilt, you can say some news coming up in that particular stock, or maybe something good changes are going to happen in that particular company, and it seems as per valuations or maybe technical thing or maybe some news or whatever the reason is. We don't want to get into the reasons. No matter whatever reason is, the stock seems to be a very good stock buy at a particular price, and it is possible that this particular stock will keep rallying on the upside in next few months or maybe few years. So what happens is, first the institutional guys will come in, the domestic institutions, the FIIs will come in, they will start buying because these guys have probably more insight than all of us. Even a technical analyst, even a technical guy is ultimate a retail guy, but yes, he has much more knowledge than a person who is trading without any knowledge, right? So basically, when the stock starts going up, first the FIIs will start buying, the domestic institutions will start buying, the mutual funds will start buying, right? Now, as the stock starts going up due to this buying happening, people like me and probably other technical traders will find a probable breakout on the stock on a daily chart or a weekly chart or an hourly chart. They will start buying. Why? Because they seem that the direction of the stock is going up. They'll keep a particular stop loss, they'll keep a particular target, or probably they will trade without any target, which is called the absolute trend following trading strategy. So this is how a trend is built. And then at the last, possibly retail public will jump in after a large part of the rally has already occurred. Okay. Now the third point is very simple. You need a trend to make money. Maybe whatever style of trading you are implementing currently. So whether you are doing day trading, whether you are swing trader, whether you are a positional trader using daily time frame charts, whether you are a long-term trader using weekly or monthly time frame charts, whether you are a reversal trader, you are trading only reversals, you're not trading trends. you are trading reversals. But we need to understand one thing, like when a trend is getting reversed, you can see over here. So from an uptrend, when you see some sort of sell-off coming over here, you'll at least need this direction on the downside. And what is this? This is nothing but a trend. So ultimately, whether you're trading reversals, whether you're a buyer at supports, even if you are a buyer at support, say for example, this is a support and the stock is in an uptrend, it touches the support and bounces back and goes up. So no matter what you do, ultimately you will need a trend to make money. Which means if you buy a stock at 100 rupees, if it is not moving, if it's going to 105, coming back to 100, going to 95, coming back at 100, continuously it's just going up and down, you won't make any money. If you're a positional trader, you would want that stock to go higher consistently or maybe trend lower consistently and make money on the short side. All right. So ultimately, no matter what you do, you will need a trend to make money. So if you need a trend to make money, why not just use the trend following trading strategy and make your life simple, right? Now, the fourth point over here is trend followers react on trading signals. They do not predict. Say, for example, I would say that a particular stock, let's go to a stock called DMart. Okay. Now, somewhere over here, possibly you can see this is DMart stock and this is 2676, the price in DMart. And this is a 100 days simple moving average in front of you. At this point, as a trend following trader, I would not go and buy this stock. Why? Because the stock is below the 100 days simple moving average. But if the stock closes convincingly above a particular moving average, or maybe if you're using a Donchian channel, if you're using a trend line breakout, you're using RSI, whatever. For this particular video, I have just taken for the purpose of understanding that 100 days simple moving average is a trend following indicator. So when it closes at 3064, I would probably lose some sort of, profitability over here, because I do not predict in the market. I believe that price is God. I believe that price discounts everything. All right. So I'll try to buy it at a breakout and I'll try to ride this entire trend. So according to me, I guess no one can catch a top, no one can catch a bottom, but this between part, this meaty part, this is called a trend, and that is where you will make the maximum amount of profitability. All right. So coming back to our mind map, what I was saying is trend followers react on trading signals. They will never go and predict. If a stock is suppose turning around, I'm not a person, or a trend follower is not a trader who will say that the market is turning around or the stock is turning around, I'll go and short it. No. They will need a first an established trend, and within that established trend, when they see a probable correction, they will try to go short in futures, or they will, as an option seller or an option buyer, they will initiate such trading positions in that particular stock, and vice versa if that stock is going to go up. All right. Now, again saying you can profit from an uptrend and even in a downtrend. I think this is already clear with all of you. When I was discussing the previous particular part over here, trend followers react on trading, when I told you that you can profit in a rising market and even in a falling market. Now, say for example, if there is a stock like, say, Axis Bank. Okay. So when this particular stock is rising, you are able to profit from this entire uptrend, correct? But at the same point of time, when these corrections are coming in, you are also able to profit from these downtrends. Again, I am making myself clear, guys. This is just for the understanding part. This is not the right way to trade, that you just plot a 100-day simple moving average and you will just short that particular stock when the stock closes below 100 days simple moving average or exponential moving average. This is just for understanding for all of you. Okay. But what I'm trying to say is you can certainly profit in the market if you are a trend follower. If you are a short-term trader, you can still employ trend following trading strategy and profit for the short-term corrections and even short-term rise, and even positional rallies on the upside. So this is what you need to understand. Now, this particular uptrend, I think it started in July 2022 at around 715, and it ended somewhere around at 858. Okay, so this is an entire uptrend. All right. Now, my next point is profits with smaller quantity even at small risk. What I'm trying to say about this. This is nothing but position sizing. Like if you are a trend following trader, you need to understand that the risk reward ratio as a trend following trader is very, very high. Like if your risk is say 10 rupees, your reward could be 20 rupees, 30 rupees, 40 rupees, 50 rupees. At times it is even more than that. So you can take a very small risk, a very small fraction of your portfolio as your stop loss, and the projected profitability could be very high. Yes, I completely agree to that it will not happen in each and every trade you initiate. It will happen in few of the trades where you initiate, where the profits will be extremely large. But these large profits, they are capable of taking care of all the small stop losses which will get triggered in your trading portfolio as a trend following trader, and you will still end up making some amount of money at the end of the year. And trust me, as a trend following trader, I can tell you, in comparison to all of the trading strategies out there, trend following trading is one of the most robust strategies out there. Like just for example, just go to a stock called Netflix. I am pretty sure all of you would be watching Netflix at your end, correct? Even I do, by the way. So when I'm opening this particular stock, Netflix, you can see that I don't trade in US stock markets. Okay. But when a stock closes below this 100-day simple moving average, closes below this 580, from this particular level, the stock collapses literally from 580 to 164. And when there was an uptrend, you are also able to profit from this uptrend. It is as simple as that. So what I'm trying to say is that trend following trader would generally have a very high risk reward ratio, and due to that reason, your profits will be higher even with a smaller risk fraction of your portfolio. Okay. Freedom of time. Now, this is a very strange point over here, but this is really, really big. Now, freedom of time means, say, for example, if you have initiated a trade at a particular level, say at a stock of 200 rupees. Now, the stock continues to move higher for, say, next 3 to 4 months. And in next 3-4 months, that stock rallies by 20%, 25%. And then your trailing stop losses are hit. As a positional trader, once you have initiated your trade, as a positional trader, I would repeat, once you have initiated your trade, you do not need to be in front of the screen consistently. You can continue doing your day job. You can continue doing your professional work, your family business, whatever you're doing in the daytime, and can still remain invested and can still trade actively in the market, because from 9 to 3:30 p.m., you don't need to be in front of the screen if you're a positional trader. This is what is called freedom of time. Even as a swing trader, if you have initiated a trade, all right, I generally use hourly time frame charts as a swing trader. I don't need to monitor the market every time. I don't need to be in front of the screen each minute until and unless I'm trading in options. Okay. So in case if I'm trading in cash or futures as a swing trader, once I've initiated a trade, I can be away from the screen for an hour and probably come back and just check that whether my stop loss has hit or not, whether my targets have come, whether I need to book my targets, where has that particular stock moved. So this is what is called freedom of time. Trend following trading is not about just sitting from 9 to 3:30 in front of the screen and continuously hitting your buy and sell buttons. No, that's not what is called trend following trading. It's absolutely different from that. Timing your exits. Now, this is a big one. This is extremely big. Now, I believe, guys, generally people, whomever you will ask, what to buy, which stock to buy, I think people will give you probably a list of 5 to 10 stocks that you should buy these stocks, and probably you will be able to profit from these stocks because these are really good companies. Fine. I completely agree to those people. But what I believe as a trader, and I completely respect each and every person who believes that you should not time your exit, fine. If it's working for you, good for you. I completely respect you. But according to me, timing your exit is very, very important. Why? The reason for that is probably 10 years back, 20 years back, 25 years back, the business cycles which used to happen in the stock market were very, very long. Like, say, for example, if a company was doing some sort of business, it will remain a leader in that particular field for many decades to come. But today, as the technology is moving so fast, the technology is so fast that that entire cycle of business has become very, very smaller. And as a trader, if I bought a particular stock, say for few months or maybe couple of years or whatever, after buying the stock, if the stock is not going to perform, for me, it's absolutely pointless, because probably I would have deployed that money somewhere else, probably on the long side or on the short side, and I would have made money in that particular stock, because ultimately, my friends, all of us are going to die one day. And I don't want to spend 5 to 10 years of my life holding stocks which are not moving. And time is money, so value it. So what I'm trying to say is, if you have purchased a stock, if it is performing well, great. As soon as it starts correcting and it hits your trailing stop loss, in fact, if you are a person who is watching this video right now, and if you are following a trend following system, if you're following a stop loss strategy, please obey it. Otherwise, this is what will happen, what happened over here in Adani Enterprises. You can see over here. Probably Adani Enterprises started an uptrend at somewhere around 1739. It kept on rallying till 4166 or 4171, whatever the rate is. Somewhere over here, I guess it got an exit at 3609. If you would have made that exit, you saw the correction which came in. Correct? And forget about even this particular stock. All right, because it's a debatable stock. Many people feel that it is not a very strong fundamental stock. Fine, just forget this stock. Just see Asian Paints. It has been going up and down so many times. Now, whenever this particular stock is in a downtrend, why would I hold this stock? Why would I not profit in this zone on the long side? All right. And when I can see very, very clearly that stock is in a downtrend and now it has gone up, shorted up. And as a swing trader, why will I not go and short over here? When it starts correcting and when a probable downtrend is established, I can even profit in this stock as the trend following trader on the short side. Why should I keep holding a particular stock for eternity? So this is what I don't believe in. I always believe timing your exits is very, very important. And as a trader, you need to understand that if your current valuation of your portfolio is say 20 lakhs, just for example, this is not your current valuation. This is the current market price which is giving that valuation. If tomorrow, maybe a month later, if all your stocks starts correcting, if the market starts correcting, your value is not going to be 20 lakhs. Whatever value you actually have is about the book profits. यानी कि जो profit है उसको booking करिए whenever your trailing stop loss is it. That's what I'm trying to tell you. Say for example, if your portfolio size is 15 lakhs and after 6 months it goes up to say 21 lakhs, and after a 6 months, say for example, there is going to be a correction in the market and you believe, okay, I have made good money, I'll remain in these stocks forever. And when the market corrects from 21 lakhs, your portfolio comes down at 18 lakhs, 17 lakhs, and probably some people say that I'm still in profits. Fine. I respect all of those people and I don't want to debate on that. But as a trader, I would say that if I was making 21 lakhs, I was in a profit of around 6 lakhs on a portfolio of say 15 lakhs. And when this market started correcting, When my trailing stop losses got hit at around 20 lakhs or something valuation, I could have made that much amount of money. And after that retracement, when the market corrects and again starts going up, I'll probably be able to compound that money and I'll be able to trade with 20 lakhs of portfolio rather than 15 lakhs. So this is what is timing your exits. And this is the reason I gave a lot of time to this particular point. No targets. Well, this is also a very big point. No targets means as a completely trend following trading strategy, generally there are no targets. What happens is when a particular stock is going up, all right, this is particular stock, you will always have a tool, which is your stop loss indicator, which will be just below your price, all right. And as soon as the stock starts topping out, okay, and it starts coming down, that particular tool will give an exit over here, somewhere over here, and you will be able to exit your particular trail, and same time it will also give you an entry. So this is the entry and this is the exit. No targets in between. Yes, some people do have a habit of putting partial profit booking, or some people, rather than being a completely trend following trader, they will employ the strategy of target based trend following. It is completely up to you. But as a trader, I would believe that trend following trading strategy is very robust. And if you want to capture a very big move on the upside or on the downside, then this is one of the best strategies out there. All right. I hope this particular educational video has helped you to enhance your knowledge in the field of trading, and it has been helpful to you. Please let me know with your comments below that how did this video help you, so I can make more videos like this to help you in your journey of trading. Very, very soon, I'll also be coming out with a video in next few days to probably couple of weeks, where the topic will be benefits of trend following trading strategy, where I'll try to probably go even deeper in this particular topic. All right. Till then, enjoy the trend. Thank you.